Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 21st, 2025, and we're diving into Flexsteel's fiscal first quarter 2026 earnings report. Flexsteel, a leading manufacturer and marketer of residential furniture in the U.S., has just released its latest financial results. Joining us today is John, senior analyst from Smart Stock Watch, to break down the numbers and provide insights into the company's performance. John, welcome to the show.
Thank you for having me. It's great to be here to discuss Flexsteel's latest earnings report.
Revenue and profitability overview. Let's start with the top line. Flexsteel reported net sales of $110.4 million for the first quarter, marking a 6.2% increase compared to the same period last year. John, what are the key drivers behind this growth?
Flexsteel's growth is primarily driven by their sourced soft seating products, which offset lower unit volumes in other categories. The company's strategic investments in innovation and marketing have also played a significant role in propelling this growth, despite a challenging macroeconomic environment.
And how about profitability? The company reported an operating income of $9.0 million and a net income per diluted share of $1.31. How does this compare to last year?
That's a substantial improvement. Last year, the operating income was $6 million and the net income per diluted share was 74. This indicates a strong margin expansion, with operating margins increasing to 8.1% from 5.8% last year, thanks to disciplined product portfolio management and operational cost savings.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 78 cents for this quarter, based on a survey of one analyst. However, Flexsteel reported an actual EPS of $1.31. John, what does this significant beat tell us about the company's performance?
This is indeed a remarkable beat, exceeding expectations by 53s. It highlights Flexsteel's ability to navigate through economic challenges effectively. The company's focus on operational efficiencies and strategic growth initiatives has clearly paid off, resulting in a robust financial performance that surpassed market expectations.
Operational efficiencies and future outlook. Moving on to operational efficiencies, Flexsteel reported a gross margin of 20.5%, up from 21.5% last year. SG&A expenses also decreased as a percentage of sales. How has the company achieved these improvements?
The increase in gross margin is primarily due to sales leverage and favorable foreign currency translations. The decrease in SG&A expenses as a percentage of sales is attributed to higher sales leverage, despite ongoing investments in growth initiatives. These factors combined have contributed to Flexsteel's improved operational efficiency.
Looking ahead, the company faces new tariffs on imported furniture, which could impact future performance. How is Flexsteel preparing for these challenges?
Flexsteel is aware of the potential disruptions from the new 25% tariffs, which will increase to 30% by January 2026. The company is agile and has a history of adapting to market changes. They are taking proactive measures to mitigate the impact, such as adjusting pricing strategies and optimizing their supply chain to maintain competitiveness and drive long-term growth.
Key takeaways. In summary, Flexsteel has delivered a strong performance in the first quarter of fiscal 2026, with impressive sales growth and profitability improvements. Despite facing potential headwinds from new tariffs, the company remains well-positioned to navigate these challenges. Thank you, John, for your insights today.
Thank you for having me. It's been a pleasure discussing Flexsteel's performance.
Thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Flexsteel's performance, so feel free to leave a comment below. Until next time.